The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organization mentioned in this podcast.
Okay, it is Thursday, the 19th of December. Not many sleeps till Christmas.
No, very exciting.
I'm guessing there's not much news for next week, but we can talk about that later on. And it feels like we've had a slightly bouncy week in the run-up to Christmas. How have you seen things?
Well, yeah, overnight, Jay Powell seems to be prepared to play the Grinch this week, ending the market's Santa rally a week early. There was nothing surprising about the Fed's decision to reduce rates. What the market took fright at was the dot plot forward guidance of rate reductions into 2025, which was disappointing. So unsurprisingly, with rates higher for longer, there was a move up in the value of the dollar and quite a significant sell-off in risk assets. So the dollar, as measured by the DXY, its trade-weighted form, is now at its highest level since it peaked in November 2022, which is obviously just over 2 years ago, at which point it was on a journey down from a peak of 113. But prior to that spike up, the dollar really hasn't been at this level for over 20 years. So this makes life quite uncomfortable for financial markets.
But it's phenomenal to see the dollar that strong when you've got Elon Musk all over X saying that unless the US cuts its federal spending budgets, they're going to go bankrupt. And that's quite scary stuff from someone who's at top table in terms of US planning. When he's saying that sort of thing, at the same time, you've got the dollar at, well, not all-time highs, but
yes, but heading back to the highest we've seen for a long time. And there's a sort of paradox here, isn't there, in terms of when anything goes wrong or is perceived to be going wrong with the US economy or the soundness of the dollar, its position as the reserve asset means that they can export those problems to the rest of us. And the dollar and dollar assets are the gold standard, to use a Bitcoiner term, in the fiat world. So it's all part of this dollar milkshake theory that as things become more chaotic and uncertain, the dollar will suck in all the other currencies in its wake because it is the least dirty shirt in the laundry pile.
Right, yeah. And as long as they keep that exalted status, then they'll always be okay.
Yes.
Woe betide them the day it changes, I guess.
Yeah. But of course, as we get this stronger dollar, it tightens financial conditions and it increases financial market uncertainty and it destabilizes risk assets. So overnight, we saw a further fall in equities and Bitcoin, probably the ultimate liquidity-driven risk asset, fell quite sharply. So I think the question going into Christmas is this the end of the Trump trade? Maybe, but I would suggest it's probably too early to know.
And that might not be a bad thing for UK investors. If the Trump trade was driving the domestic US market to all-time highs and in many ways propelling the Mag 7 and certainly Tesla, I mean, it was a real homegrown US boom. I remember we were saying a couple of weeks ago that was sort of mitigating against the dispersal trade that we talked about, where the money might reach out even as far as the UK market or even as far as the UK small cap space. If the Trump trade's coming to an end, then that might not be a bad thing for us.
My sense is that in this period where the Trump trade has faded a bit and then had this setback overnight, things were marked down this morning. But I think some of these cheaper equity markets like the UK, maybe even China, are all of a sudden going to be a beneficiary of this dispersal trade. But one needs to keep a close eye on that DXY, that dollar level, as a gauge of the ability of the US to sort of export its uncertainty, if you like.
Okay. And in terms of the UK, it sounds like we've had quite a busy week here as well. There's been quite a bit of data coming out outside of the pond.
Yeah, absolutely. So we had inflation for November, which is annualizing at a rate of 2.6%, up from the 2.3% in the prior month. which was in line with expectation and really indicates that the UK has some of the same issues that are now being noticed in the US in being able to really tackle that last mile of inflationary pressure. As far as the UK is concerned, a major component of this inflationary stubbornness is the pressure in the labour market. We had wage growth numbers this week. So the annual wage inflation in the UK is running at 5.2%. So it's running at exactly twice the annualized rate of reported inflation. And there are other headlines to boot in the last couple of days: rising water bills, higher electricity bills, and an ONS report saying that London rents are growing at their fastest annualized rate recorded since 2006. So it doesn't feel like we're in a world where inflation is fully under control. I mean, don't know about you, but doing Christmas shopping, things certainly aren't getting any cheaper.
That cost of living crisis doesn't seem to have been fixed just yet. No, there's definitely a lot of inflation still out there. And yeah, stubborn, I think, is probably right. So the Bank of England left rates unchanged today?
Yeah, as expected. And Bailey said today that the UK will proceed with a gradual approach to rate cutting. And although we've seen UK yields fall a little bit today, particularly at the shorter end, the benchmark 10-year gilt yield is now at the highest level since just before the global financial crisis and has now moved reasonably decisively above the level it reached during the sort of Truss meltdown moment of just a couple of years ago. And I think the overall message is on both sides of the Atlantic, is that these rates are not coming down quickly into 2025. And along that path, we had another rate decision out of Tokyo overnight, where the Bank of Japan also decided to hold rates at the still highly abnormal 25 basis points. That's not a rate of change. That's their actual policy rate.
That is the interest rate. Yeah, that's right.
They held at that level, which caused the yen to weaken and put back to bed, really, the idea that this yen carry trade unwind might rear its ugly head again. So I think if we had a niggle from Tokyo, if you like, in monetary policy, that could have magnified an instability that is there, but being contained, I would argue.
Okay. And how about more broadly, with other things going on? Is there anything else out there that we should be thinking about?
Well, in China, we had weaker than expected consumer spending data, which is supportive of the idea that the Chinese Politburo, they want to take a greater control of the economy and stimulate it further. But I think they're hesitant to show their hand before they know what the incoming Trump administration is likely to do by way of tariffs. In other news, we've had Putin reportedly today saying that he's ready to talk to Trump and negotiate from a position of Russian strength, as he sees it, in the desire for Trump to put to bed the war in Ukraine. And back on his home soil, Trump continues to make his presence felt ahead of the inauguration by rejecting the Republicans' plan to avoid a government shutdown later this week, or tomorrow, in fact. And I think in a political show of force, basically telling Capitol Hill that this administration is different and really wanting to hold some feet to the fire ahead of what was expected to be a pretty easy passage of a bill just to avoid a government shutdown for a few weeks until we got into the new administration. So, yeah, Trump's decided to negotiate hard up front and early with Capitol Hill.
That's extraordinary with the dollar, as you're saying, it's sort of 20-year highs, and they can't even agree the budget for a few weeks. As you said, it's a very paradoxical situation. But yeah, they've got the benefit of that reserve currency. So their confusion becomes our problem.
Sure, absolutely.
Yeah.
What have you seen in the UK this week? What's caught your eye?
On the progressive client front, we had a couple of bits. We had iDocs, which is a supplier of software into mainly local government, which is it's been their homeland. And they landed a £2.4 million contract with North Yorkshire to amalgamate 8 different systems at North Yorkshire doing planning and building control. They've all been brought together onto one platform and moved into the cloud. So in some ways, it's a great reference client in terms of the fact that there's a lot still to be done in the public sector. I suppose I was surprised that they had 8 separate systems in to run those things within North Yorkshire, but they do. And there's an opportunity for people like iDocs to bring those together, move them into cloud, obviously to consolidate and improve and optimize. It's the right thing to be doing. And it's good to hear that there's still work to be done and opportunities there for them and other players, obviously, in the public sector. So interesting to see that coming through this week. And we published a spotlight note on a client of ours, Petrometad, in the oil and gas space. Really bit of a catch-up piece on what's been going on as they move from exploration into the production phase. They've had overall pretty good results. Their Heron 1 field is now in production. Heron 2's been more problematic with relatively low levels of flows, but Heron 1's been going quite nicely. And overall, it's just nice to see a business make that move from the traditional exploration and sort of opportunity into the world of production and real barrels being sold for real dollars. So it's nice to have seen them make that move.
Absolutely, yeah.
Were there any other stocks that caught your eye this week?
Well, there's one we've talked about before, which I'm a long-suffering shareholder of. It's Artisanal Spirits.
Indeed,
which
yes.
had results. And there's a lot of things that the market doesn't like about this business. The lack of profitability and cash flow being the most prominent one, although they're making great strides at trying to improve both those things. And it has quite a lot of debt for a small company. I think it peaked at 27 million, but it's still got something like 25 million pounds worth of debt.
Mm-hmm.
But it's backed by whiskey assets, barrels of malt whiskey sitting in their warehouse. It has been valued at 100 million, which is significantly in excess of the enterprise value and the market cap of this company. So, interesting one. The share price had a little bit of a flicker of life, but then went back to sleep again. So not really quite sure what to make of this. But one day, the value will come from this little company, in my opinion.
Yeah, I think there's clearly a difference of opinion between the market and, I suppose, the management team or the business in terms of either the value that whiskey has today or what it can be realised for over time. I remember suggesting to them a long time ago that maybe if they sold a decent chunk of it in one go to somebody else, that would crystallise the value or demonstrate to the market that if they're saying it's worth 100 million and they sell a tenth of it for 10 million, that will be a great way of demonstrating that it's right.
They could buy back a few shares with 10 million quid.
They could indeed, yeah. Or pay down some debt, which might reassure people as well.
Yeah.
So, interesting to see their results. And as you say, it'll be a great one to watch into next year as they deliver on that, hopefully improved profitability.
And of course, one of the angles on Artisanal is that its product offering, I mean, it is a luxury product. They do the product very well. Their venues are great. Their membership perks, if you are into malt whiskey, are brilliant. But it's in an industry that has been under a lot of pressure from what's going on in China as much as anything else. So I still harbour the view that this has some contrarian attractions, trading at such a discount to its appraised, albeit self-appraised NAV in terms of its barrelage, but also an interesting way of playing perhaps a better outlook for China in 2025 and beyond. Not investment advice.
No, but if Xi Jinping's invite to Trump's inauguration is a signal of more positive things to come, Artisanal could be an unusual beneficiary. Yeah.
Yeah. If he brings a luxury bottle of Scotch malt whiskey as his inauguration present for Trump, that would be the signal we need.
I'll be watching the televised inauguration to see if it's there. That sounds good. Okay. I'm assuming not much in the way of macroeconomic news scheduled for next week. Is there anything?
There's a thing called Christmas coming up, I think, next week. So that seems to be dominating proceedings. Tomorrow, Friday, we have some UK retail sales data and some core PCE data, both of which I think will be interesting to digest. But yeah, I think most people are probably battening down the hatches, doing some last minute Christmas shopping and tidying things up and going to sort of have another look in the new year.
Perfect. Okay, well, on that note, let's bring it to a halt and draw 2024 to a close from a market call progressive perspective.
Yeah.
Wish all our listeners a fantastic Christmas and New Year break and look forward to 2025.
Yeah.
Talk to you in the new year.
Have a good one.
Brought to you by Progressive Equity.